ಹೆಡ್ಸೆಟ್ ಮಾಟಿಟ್ಟಿದ್ದೆ ಕ್ಲಾಸ್ ಸ್ಟಾರ್ಟ್ பண்ணும்போது அப்படியே எடுத்து வச்சிருக்கேன்.
The poorest among the poor pay indirect taxes on small things they buy. A very good evening and heartily welcome to one and all virtually present here for today's live session on recap discussion on November 2020 RTP organized by Sikasa Bengaluru. Myself, Sai Chaitanya, CA final student and treasurer of Sikasa Committee Bangalore. First, I would like to welcome our esteemed chairman of Sikasa Bengaluru, CA Fanindra Gupta sir. Welcome sir, good evening.
Good evening.
Our today's eminent speaker is fellow member of Institute of Cost Accountants of India, specialized in indirect tax, GST and customs with 10 plus years of experience in taking classes for CA final students and other professional students. He contributed articles for many tax journals like Taxman, Syntax and other online journals like CA Club India, Tax Sutra, etc. He also authored books like Only This Much for CS Professional Program, resource book on indirect tax for CA final, resource book on GST and customs. He also got the award TAFE Endowment Award from Institute of Cost Accountants of India for securing first rank in Southern India at CMA intermediate level. Yes, he is also well known for his Jugalbandi series, that is mixing of GST and corporate laws, which is a unique initiative taken by Sir. With this brief introduction, now I welcome our today's speaker of the day, CMA Tharun Raj sir. Welcome sir. Namaste. Now I hand over session to the Sikasa chairman, Fanindra sir. Over to you sir.
Thank you, Chaitanya. Happy evening and a warm welcome to all the students who are virtually attending today's session on recap discussion on November 20 RTP indirect taxes. On behalf of Sikasa Bengaluru, I take this opportunity to welcome our today's session speaker, CMA Tharun Raj sir. I am very happy to know that only this much book is authored by you, sir. In fact, I also referred your book while preparing CS exams. And thank you so much for joining all the way from Chennai, sir. And GST is an evolving subject, and it's very much important to have strong foundation in this subject, as it will help you in your career in long run. As yesterday I have already told, so CA students being exam season, so there is very much connect is required why they really wanted to do CA, and based on that connect, so they can able to achieve whatever they wanted to achieve in their career. So for that, I just wanted to bring forth a small quotes about CA profession, which are quoted by uh, the distinguished personalities. So, quotes from distinguished personalities like Dr. Rajendra Prasad, so President of India, first President 1950 to 1962. So he quoted like the fast increasing tempo of the industrial and economic development of the country makes it imperative that every chartered accountant should realize that he belongs to a profession which provides the first line of defense to the unwary public against money grabbers and opportunities. So your responsibility in this matter becomes all the greater because of the autonomy which your profession enjoys. So during 1950 to 62 itself, he has quoted like this. And Dr. S. Radhakrishna, President of India, and also we celebrate Teachers Day on September 5th. So Sir has also quoted like, you will help us in maintaining high standards of public behavior by your frank and candid accounting and auditing. It is therefore essential that you maintain high standards. Whatever profession you might follow, you should not forget that everyone in is in an artist in his own line, whether it is in accounting or auditing, writing or doing the job of a sculptor or a painter. And also we have Sri Lal Bahadur Shastri sir, Prime Minister of India during 1964 to 66. I cannot conceive what would happen if there were no accountants and no auditors. Not only the mute shareholders in a private company, but the industries and the economy of the country as a whole world suffer without your help and adequate guidance. And also our famous Dr. APJ Abdul Kalam sir, President of India during 2002 to 2007. So I suggest that all the CAs should take the following oath. I will not only bring out the problems of financial management for protecting the interest of the stakeholders of the enterprises, but also suggest possible solutions with ethics as a way of life. And Sri Narendra Modi sir, PM now. Yours is a profession in the society that has a capacity to save this entire economy and keep it growing. A chartered accountant's role should be such that he knows that he is not working just to add or subtract these numbers between 0 and 9, but he should feel that he is playing an important role in building the economic infrastructure of this nation. And Sri Pranab Mukherjee, sir, President of India, 2012 to 17, he told like, let me compliment the ICA for their initiative work with financial institutions in streamlining and fine-tuning the financial reporting, auditing, and accounting architecture of India. ICA needs to be lauded for taking various initiatives for implementation of Indian accounting standards coverage with IFRS in letter and spirit. And last but not the least, Ratan Tata, Chairman Emeritus Tata Group. I need MBS to run my business, but I need CS to teach MBS how to run business. So, my dear students, so what I meant is like just whatever you wanted to do in your life, just believe in yourself. So always, if you believe in yourself, whatever you wanted to achieve in your life and in your career, so you will be able to accomplish. So with this small success stories or successful quotes quoted by famous personalities, so I conclude my welcome address and over to Tarun Raj sir for today's topic on indirect taxes, discussion of RTP November 2020. And over to Tarun Raj sir for today's topic on indirect taxes, discussion of RTP November 2020.
Yes, sir. Hello, friends. Hello, friends. Thank you for this live session by Bengaluru branch of CCASA, and thanks a lot, Panindra sir, for giving me an opportunity to interact with the students through this platform. And thank you, Chaitanya, for your introduction about me. So I really feel privileged for taking classes for Bengaluru, and we can start because I know many of you are waiting, and so already Anindra sir has given wonderful speech about the CA profession. So therefore, I don't have to add anything more than that. So because big wigs, lot of legends have spoken great about it. Now let's focus on to how to become CA. So because that's very, very important. So I'm just moving on to the discussion. The current day's agenda, the discussion is related to RTP. I know that many of you are in the frustration of postponement of exam, perhaps cancellation of exam to November 20, because again, should we learn again, or sir, because when it is before the exam, we have the habit of learning just 2 months, 3 months before the exam, and wherein now the exam got cancelled and it is in November, again we need to read and many amendments. So I don't know what we are going to do. See, don't worry. That is, see, ICI also knows that the students are undergoing pain, and they will never be troubling you, because the current RTP is an evidence for that. Because I have been taking classes on indirect taxes for last 10 years plus, and over years I have been seeing how CA Institute is setting the question paper. Trust me, in old syllabus, indirect tax was very, very difficult paper. And even in the recent past also, so the GST was asked in a standard manner, but this RTP, they did not give any such kind of troublesome for the students. They made it lighter only. So RTP will be always as an index of the exam mainly. So in this standard, if your preparation is in, if you are able to solve these questions at least, then which means that you can cope up for the exam. So that is the objective of revision test papers. Okay. Now, this revision test paper of November 2020 attempt, part B, I am discussing, that is goods and services tax. You are all aware that we have GST for 40 marks in part B dedicatedly, and in that 12 marks we have MCQs and remaining is descriptive. In this 12 mark MCQ, so they have given case scenario MCQs. So actually it should have been tested for May 2020 exam, but not tested because the exam did not happen. And for May 2020 RTP itself, they gave case scenario MCQ. What is this case scenario MCQ? You will be given a question like this. So you can see on the screen, So a question like this will be there. And like just like a practical question, you will be having a question. And based on this question, they will be giving some MCQs. Okay. And these MCQs, if you need to answer, definitely you need to go through this question. So therefore, this is known as case scenario MCQs. And that case scenario MCQs, you will get 1. And that may be for some, 4 into 2, 8 marks. And remaining 4 marks, they may give some 1 mark MCQ. Because in May 2020 RTP also they have given this, and November 2020 RTP also they have given. Okay. So what is the strategy to tackle this case scenario MCQ? First, you should not read the paragraph, because we all have the habit of reading, and whenever we see something from the beginning we read. And please change that style a little bit, because when you read this paragraph, it is like, you are going in a place and you don't know anything about it. You are walking, there are no lights. So in the dark you are walking. You don't know what is the objective. So what is that place? Is it a forest, or is it a desert, or is it a road, or is it your house? You don't know. So like that it will be when you read the question without knowing the objective. What is the requirement? That is important. See, in life, first requirement is important, then only whatever the hard work that we put in. So we need to know the requirement in this. So my suggestion, see, ultimately it's my suggestion. Whether you want to take or not, it's up to you. So my suggestion is that we will skip reading the paragraph first. So first we will skip reading the paragraph and go to the question. So what is the first MCQ? So we are making a bird's eye view here. With respect to buy one get one offer, which of the following statements are true? So they gave something called as buy one get one offer. For that they have given one question. Means it is something related to the levy part, supply. Then eligible input tax credit for the month of May. So for the month of May means there involves some computation also about ITC. So we need to have some information or knowledge on input tax credit. Then which of the following statements is true in respect of services of advocate availed by the company? So they are giving some advocate services related discussion. And then these are the 3 MCQs. So therefore, now we understood what are the MCQs about. So the MCQs are about something related to supply, something related to input tax credit, and something related to advocate services who is liable to pay GST. Now, the questions are on these 3. So when you read the paragraph, you will know what to really understand and correlate. So that is what I am expecting. Okay. So first we understood this. We got a bird's eye view about it. So these 3 areas they are a testing. Now go back to this. So when you read the paragraph, now you know what is the requirement that we are going to do. So accordingly, PTL Private Limited is a retail store of merchandise located in 25 states under our union territories in the country. For the purpose of clearance of stock of merchandise and to attract customers, they launched a scheme. Buy one, get one free for the same type of merchandise. For instance, one shirt to be given free with the purchase of another shirt. For saving cost, the PTL Private Limited directly purchases merchandise from manufacturers. Now, this is the next step. What is the first step you need to do? You need to have a look into MCQs once, a brief look. a bird's eye view kind of. Then second, you need to check the paragraph and you break it into parts, because when you read it like a novel, you will not be able to understand. So you should not read it like a novel or read it like a newspaper. So you read first paragraph. Now what is the information in that first paragraph that should get registered in the mind? Okay, it's a temporary memory for solving this question. So what is that? They are having branches across the country, and in order to push the sales, what they are going to do? They are going to do buy one get one free. Any product you buy, other product of the same time, same kind you will be getting as free. And thereafter, in order to reduce the cost, what they are doing, rather than purchasing from a wholesaler, what they are doing, they are directly procuring from a manufacturer. So that data is in this paragraph. Now, continuation. In the month of May, in order to save employee cost, PTL Private Limited purchased a tempo traveler worth rupees 12 lakhs with seating capacity of 25% including driver for transportation of its employees. Okay, so they purchased one motor vehicle with a capacity of 25 including driver. Further, for ensuring the well-being of its employees, PTL Private Limited voluntarily obtained a health insurance cover of 2 lakhs for each employee in the same month. The premium of 1,500 per employee has been paid by the company. So they got two inward supplies. Inward supply number one, they purchased a motor vehicle. Inward supply number two, they have received health insurance services. This is about that second paragraph. Next. In the month of July, Mr. Raghav, a customer of the company, filed a lawsuit in the court against the company for not supplying the goods of the value of 1 lakh. PTL Private Limited engaged Mr. Ram, an advocate, to represent it in the court for an agreed consideration of 25,000 rupees. As per the terms of the contract, Mr. Ram issued an invoice on 5th July. However, consideration was not paid till February next year. So this is what they received an advocate services. For receiving advocate services, they received it in which month? 1 lakh is the value. They received it in the month of July, because as per the contract, Ram issued invoice on 5th July. However, consideration was not paid till February next year. So they have appointed one advocate. They received advocate services, and for which the service charges is 25,000. So 1 lakh is not the service charges, 25,000 is the service charges, and 5th July is the date on which they got the invoice, and the payment is not made till February of the next year. So this is what it is. Next, some note is given. All the amounts given above are excluding taxes, and all transactions are intrastate transactions. Rate of tax CGST, SGST. However, for tempo traveler, the rate of GST is 14% CGST, 14% SGST. When we read the question, first what we did, we had a bird's eye view about the MCQs. What is that about? Then we read the question. When we read the question, in first paragraph, they gave some information about buy one, get one. Second paragraph, they gave some information about input tax credit. Third paragraph, they gave some information about advocate services. Actually, based on these three paragraphs only, they gave 3 MCQs. Okay, so now that is over. Second step is over. Now the third step, we will read the MCQ now with full-fledged as to what is the answer. We need to identify, but on the back of our mind, the provision what we have learned should be running. So because it is just application of provision only, so what is the provision that we have learned, we should be knowing. So look into that. With respect to buy one get one offer, which of the following statements is true? Which of the following statements is true? So whenever you see a question like this, you should be very, very careful, because which of the following statements are correct, which of the following statements are incorrect, which of the following statements are true, which of the following statements are false. It is confusing area because of the pressure that we will be in writing the exam. So it is true. They are asking what is the true statement. What is the true statement? Now, related to this, we need to know some provision. So just read the MCQs. So it will not be considered as supply at all, since no consideration is involved in one of the items. They are telling it is not a supply. That is one statement. Supply of item for which consideration is charged is supply under section 7 of CGST Act, while supply of other items supplied free of cost is not a supply. So they are telling whichever product is given for consideration is only supply, the other one is not a supply. Then these are two individual supplies where a single price is charged for the entire supply. Since a single price is charged, the same will always be taxed as mixed supply. These are two individual supplies where a single price is charged for the entire supply. Their taxability will depend upon as to whether the supply is composite supply or not. Like this, 4 options are given. Now, you cannot answer this without knowing the provision. You should know the provision, applicable provision related to it. So now, what I am doing, I am discussing with you the applicable provision to that. From there, you will be in a position to understand the answer. Okay. So this document, what I am writing, so will be shared to you. Don't worry. So along with this video, so in the description, after the session gets over, I will share whatever I am writing to Bengaluru branch of CCASA and they will take care of putting it. Okay. So therefore this document will be available in the description. Don't worry. So now you focus more on to understanding it. Okay. So first, what is the applicable provision that we need to know? So it is related to that case scenario MCQ. Supply of goods without consideration. It is like free samples or gifts. Okay. So distribution of goods purchased. Distribution of goods purchased as gifts or free samples. Distribution of goods purchased as gifts or free samples. What is the treatment? Is it for consideration or without consideration? Free gift or sample, where from there is consideration. So the activity is distribution of gifts, distribution of goods purchased as gifts or free samples. Now, we need to understand whether it is given as a standalone gift or free sample or it is given along with another article. So this is further divided into 2. Standalone or along with another article. Okay. Standalone. Standalone means what? Standalone means I purchase some goods and I will just like that distribute it as gift to promote it. That is standalone. Whereas along with another product, that is you buy shampoo, you will get hair oil free. You buy face cream, you will get face wash free, like that. So along with another product. Now, if it is along with another product, what is the treatment? Simple. So you are already getting one product and apart from that product you are getting a free article also. Now we need to classify it as composite supply or mixed supply and tax it accordingly. So along with the other product, for example, I am just giving you an example here. That is, buy 5 kilo rin and get a bucket free. This is one example. You are buying one product and you are getting another product as free. Now, in this case, what is that you need to do? So we have a treatment. What is a treatment? So there are 2 supplies here. Classify this as composite supply or mixed supply. Classify it as composite supply or mixed supply and tax it accordingly. The concept of composite supply and mixed supply is given in section 8. Now, soap powder and bucket is given free. Is it naturally bundled or not naturally bundled? We need to know. So, I need only bucket. Will they sell only bucket? No. Will they sell soap powder only separately? No. So not naturally bundled in the ordinary course of business or naturally bundled, and like that we have some provision. So application of that provision we need to classify what that main article and the free article. Accordingly, for a single price we take the single rate. Understood? So what will happen? So it can be either composite supply or it can be either mixed supply. It can become either composite supply or mixed supply. It does not mean only composite supply. It can become either composite or mixed supply, and single price will be mentioned on that. So take the single price mention, and multiply rate. Single price mention into GST rate. Now, on the free product purchase, can I take ITC? Yes, I can avail ITC on the free product purchased. ITC can be availed on free product purchased. Sir, where is this information? This information is in CBIC circular. So whatever the discussion that we are making now, it is not that I created. I did not create. Where from I will create? So this is as per CBIC circular. Now, what if it is a standalone product? Then it is divided into two. ITC availed on purchase, ITC not availed on purchase. So at the time of purchase of this free gift, whether I took the ITC or not, ITC availed on purchase or ITC not availed on purchase. So it is divided into two. If ITC is availed on purchase, then in this case, when ITC is availed on purchase, then at the time when you give it as a gift, it will become supply under section 71C. Supply under section 71C, where it will come? Supply under 71C, disposal of business asset. On which ITC avail. Is it for consideration or without consideration? I started with free gift or sample, then where from there will be consideration. When it is free gift or sample, it is without consideration. That's why I am referring to 71C. Section 71C is applicable when there is no consideration. So disposal of business asset on which ITC is availed. What if ITC is not availed on purchase? Then it is not a supply. Why it is not a supply? We have section 7, subsection 1. In that section 7, subsection 1, we have three clauses. Clause A, activity for consideration in the course or furtherance of business. That is not applicable. Why not applicable? Because there is no consideration. Okay. Then section 7(1)(b), import of services for consideration in the course or furtherance of business. That is also not applicable because it is not import of services. Then section 7(1)(c). In that section 7(1)(c) is also not applicable. Why? Because there is no disposal of business asset on which ITC is availed. We did not avail ITC on purchase. So it will not come there. And it will not come under any other point also under 7(1)(c). So consequently, it is not a supply. So this is the applicable provision for that first MCQ. So question number 1, MCQ 1, for that, this is the related provision. Now, based on this, what will be the option here? Based on this discussion, what will be the option here? It will not be considered as supply at all. Wrong. It will be considered as supply because buy one, get one. So it will be considered as supply. So this is a wrong statement. Supply of item for which consideration is charged is supply, while the supply of other item for free is not a supply. No, both will come under supply. Buy one, get one. Both will come under supply. These are two individual supplies where a single price is charged for the entire supply. Since a single price is charged, the same will always be taxed as mixed supply. Actually, up to this is correct. Up to this is correct. That is, single price we need to take as entire supply. Up to that correct, but always taxed as a mixed supply, that is not correct. That is not correct. It can become composite supply or mixed supply. These are two individual supplies where a single price is charged for the entire supply. Their taxability will depend upon whether it is a composite supply or mixed supply. It is from the discussion, a chart, whatever we have discussed related to that. Okay. Then second, eligible input tax credit for the month of May. They made two inward supplies. One tempo traveler they purchased and they received health insurance services. So we need to know whether ITC is available or not. Now, first, related to that, we need to know the provision. What is that? Please listen. Related to input tax credit, I am discussing for MCQ2. So question number 1, MCQ2, what is the related provision? And no need to write this. In exam, no need to write this. You have to just select the option. I can also select the option, but I am just giving you this provision to understand how this answer is only correct. Why not the other answers? So that explanation part I am telling. If I need to tell this is the answer for this question, why should I take a session? Because that is already there, given by ICA itself. For every question they gave the answer. So why me to give the answer? So I am just giving you this explanation so that as a reference material it will be useful. Then second MCQ about blocked credits they have asked. Motor vehicle is actually a blocked credit. Motor vehicle is a blocked credit. What is the meaning of blocked credit? Which means that if you purchase it, you cannot take ITC. That is the meaning of blocked credit. So motor vehicle is divided into two. For transportation of persons, others. For transportation of persons, others. For transportation of persons, and other motor vehicles. When it comes to transportation of persons, further it is divided into two. That is capacity less than or equals to 13 including driver. So the capacity of that motor vehicle is less than or equals to 13 including driver, and capacity exceeds 13 including driver. If the capacity exceeds 13, it is not a blocked credit. ITC available. If the capacity exceeds 13, it is not a blocked credit. ITC available always. But if the capacity does not exceed 13, again we have a division. What is that? If it is used for further taxable supply, so further used for further taxable supply means what? I am purchasing motor vehicles and I am selling motor vehicles. So capacity does not exceed 13 means usually cars etc. will come, and I am purchasing car, I am selling car, so I am eligible for ITC. Used for further supply, further taxable supply. Then B, used in the business of transportation of passengers. Used in the business of transportation of passengers. Then C, used in the business of imparting driving skills, that is driving schools. Suppose if it is these three cases, used for further taxable supply, used in the business of transportation of passengers, and driving schools, in these three cases, whether ITC available? Yes, ITC available. Suppose if it is any other case, that is apart from these three, other cases, ITC not available because it's a blocked credit. ITC not available. Next, what if it is other motor vehicles? Then also ITC available. It is not a blocked credit. ITC available. So literally speaking, what is blocked credit is only capacity does not exceed 13 and not used for those three purposes. Then only it is blocked credit. So now, in this case, they purchased a motor vehicle having capacity 25, means that is greater than 13, ITC available on the truck purchased. Because the capacity exceeds 13, so therefore ITC available on the truck purchased. So in this case, can they take ITC with respect to the truck purchased? Yes. So in the first case, they can take ITC on purchase of tempo traveler, CGST and SGST they can take. Now you need to check what is the price of the truck that is purchased. So truck is worth rupees 12 lakhs. 12 lakhs is the truck price. And what is the GST related to the truck? 14% CGST and 14% SGST. So we are taking 12 lakh into 14%, 1,68,000 ITC available. 12 lakh with respect to first one, 12 lakhs into 14%, 1,68,000. But we have two options where 1,68,000 is there, so hold on. Now another service we need to know. What is that another service? Health insurance services. Is health insurance service a blocked credit? Yes. Life insurance and health insurance service is blocked credit. But we have some exception. What is that exception? So three exceptions are there related to life insurance and health insurance services. Let's see that. So inward supply is life insurance and health insurance. Life insurance and health insurance, we have blocked credits. Okay, so that is divided into two. Life insurance and health insurance divided into two. We have some exceptions here that we are discussing. That is inward supply and outward supply in the same category. Inward and outward in same category. Inward and outward in same category means I am an insurance company. I provide life insurance, health insurance services, and I take reinsurance from another insurance company, so I can take ITC with respect to it. I am an insurance company, my outward supply is life insurance, health insurance, and I am receiving life insurance, health insurance service from another insurance company. I can take ITC with respect to it. Then B, inward supply is part of taxable composite or mixed outward supply. So inward supply is part of composite or mixed outward supply. Mixed outward supply means what? That is, I am making some outward supply. In that outward supply, I need to provide insurance service. For example, I am into the business, financial planner. I am a financial planner. I take money and I invest somewhere and I will be giving them returns. Now I want to also offer insurance services. So I took insurance services from an insurance company and added that along with so my regular services. So therefore in this case, I can take ITC even though it is life insurance service and health insurance service, which is a blocked credit. Then number 3, C, that is incurred by employer to employee under a statutory obligation. Incurred by employer to employee. Incurred by employer to employee under statutory obligation. Under statutory obligation. So in these 3 cases, so incurred by employer to employee under a statutory obligation. Okay, So in these three cases, ITC is available here. ITC available in these three cases. Why, sir? Because it is an exception. ITC available. So in these three cases, ITC available. And other cases, ITC not available. Other cases, ITC not available. ITC not available. But in these three cases, ITC available. ITC available in these three cases, that is A, B and C, ITC available. Other cases, ITC not available. Then what does it mean? So in this case, they are receiving health insurance services under a statutory obligation or voluntarily. That word is given. That word is given in the question. They are receiving the health insurance services voluntarily, not under a statutory obligation on their employees. Therefore, ITC not available. It's a blocked credit. It's a blocked credit, because if you read that wording in the question, you can understand that it is for what purpose they received on their employees, and that too voluntarily obtained. So therefore, ITC not available in this case. So it is nil. So therefore, the answer is B, option B, CGST 1,68,000, SGST 1,68,000, and in the second case it is nil. So this is about the second MCQ. Then related to these two MCQs, one doubt is there. In first MCQ, 2 shirts, we understand that it is not naturally bundled. Then why don't we call it as mixed supply always? See, it can also be called as composite supply, and they are not specifically asking about shirts. The question is not only about shirts. The question is about buy one get one offer. So it is not specifically for shirts. They gave an example shirts, but not only shirts. So this is where we need to apply our mind properly. So if you read the question, they are telling, for instance, for example, they gave shirts, but only shirts they are not doing. They are doing lot of other products also. If the question is only about shirt, then you are right. It will become mixed supply. But the question is not about shirts. There are many other products also. Example shirt. And the question is also not about shirt. The question is about buy one get one offer. Then, so that is about that first MCQ. So next, third, which of the following statements is true in respect of service of advocate availed by the company? Now, there is something called as RCM in case of advocate services. Advocate services to a business entity is covered under RCM. So that business entity should be a registered business entity, and in this case, PTL Private Limited is a retail store, and definitely it is a business entity, and it will be covered under RCM. Then who will pay GST? That PTL Private Limited will pay GST. So now we are discussing some general information related to RCM. So question number 1, MCQ 3, some general information related to RCM. That is, there is a supplier, and there is a recipient. When supplier is making supply to a recipient, so that is supply of goods or services which are covered under section 9 subsection 3. There is something called as 9 subsection 3 RCM, wherein that recipient is having liability to pay GST to government. So to government, who should pay GST? On this transaction, generally supplier will pay, but when it is RCM, 9 subsection 3, wherever it comes, which means it is RCM, reverse charge mechanism, recipient has to pay GST to government. So recipient will pay GST to government in this case. Now, it is RCM, recipient will pay GST to government. That is first point. In RCM, what will happen? Recipient will pay GST to government. Now, can recipient take ITC with respect to the GST paid? No. recipient cannot avail ITC with respect to the GST paid if it is a blocked credit, but if it is not a blocked credit, they can take ITC. So recipient can avail ITC also. Can avail ITC. Can avail ITC. Can avail ITC if eligible. If conditions satisfied. If conditions satisfied. What conditions? For the purpose of input tax credit, some conditions are there. If that is satisfied, recipient can take ITC. Now, whenever recipient takes ITC with respect to the GST paid, can the GST be paid using credit balance? No. This GST cannot be paid using credit balance. That GST can be paid only using electronic cash ledger. Cannot be paid using electronic credit ledger. Cannot be used electronic credit ledger, ECRL. Electronic credit ledger cannot be used, but should be paid using electronic cash ledger. So they cannot use credit ledger for payment. They need to use cash ledger for payment. These are the 3 points. Point number 1, GST is payable by recipient under RCM to the government, and they can avail ITC if the conditions are satisfied. For payment of GST under RCM, they cannot use the credit ledger balance, but they have to use only the cash ledger balance. So they cannot set off with the credit balance whatever they have. These are the 3 important points related to RCM. Then recipient will make payment to the supplier, and when recipient makes payment to the supplier, so recipient has to pay price to the supplier. Is there any condition that the payment should be made on time? So payment excluding GST, not including GST, excluding GST, because recipient is paying GST to government. Is there any condition regarding the payment? Generally, there is one condition that recipient should make payment to the supplier within 180 days from the date of invoice. Otherwise, the ITC availed shall be reversed. Like that one provision is there. Proviso to section 16 subsection 2, recipient should make payment to the supplier within 180 days from the date of invoice. Otherwise, so much of the ITC availed by the recipient shall be reversed. Like that one provision is there, but that is not applicable in case of RCM. So even if payment is not made, even if payment not made to supplier, recipient can avail ITC. Recipient can avail ITC. We have something called as proviso to section 16 subsection 2. Not applicable. Why it is not applicable? Because they have given as an exception. So therefore, whether they need to make payment on time, not required. These are the 4 points related to RCM. Now, what is this proviso to section 16 subsection 2? I am throwing you some light related to that. Proviso to section 16 subsection 2. Concentrate. That is, so recipient, if payment is not made, payment not made to supplier, within 180 days from date of invoice, ITC availed shall be reversed. So this is not applicable in case of RCM. Okay, and even like that we have some exceptions also for that. It is not applicable in case of, this discussion is there na, that ITC to be reversed, but not applicable in case of A, RCM. In case of RCM, this is not applicable. B, section 71C. that is supply without consideration, there also it is not applicable. And then section 15 subsection 2 clause B, that is payment made to some other person on behalf of the supplier. So in these three cases, this is not applicable. Okay, so this is about the background information related to MCQ 3. Sir, this much should I know, sir? See, when I am explaining, it will be like this, but actually in exam, all these will come and fall in your mind. Don't worry. And you need to check this answer. Which of the following statements are true in respect of the service of advocate availed by the company? CGST 2250 and SGST 2250 on advocate service are payable by PTL Private Limited. Good. ITC thereon is to be added to the output tax liability with interest as a consideration along with tax is not paid within 180 days. False. That 180 days point is not applicable in case of RCM. Then second, CGST. So they are asking which of the following statement is true. CGST 2250 and SGST 2250 on advocate service are payable by Mr. Ram. No, not payable by Mr. Ram. Supplier will not pay. There itself the answer is wrong. CGST 2250, SGST 2250 on advocate service are payable by PT Private Limited. Correct. The condition of payment of consideration along with tax 180 days of issuance of invoice does not apply in the given case. Superb. Correct. That is only correct. D is wrong because in D point they are telling that Ram will pay. Ram will not pay. Recipient only will pay because advocate service is notified for RCM under section 9 subsection 3. Yes, advocate services to business entity is notified. Advocate services to business entity is notified under section 9 subsection 3. Okay, so due to that reason. Then next we have something, second question. So first MCQ we have completed and each MCQ will be asked for 2 marks. So D1 is also wrong. Second question is also like a case scenario MCQ, but what we need to do, we need to, as usual, stick to the format what I said. First, go to the MCQs. See the bird's eye view. The effective date of registration. Okay, about the effective date of registration, they are asking, Mr. Sham can issue revised tax invoice. Eligible input tax credit available with Mr. Kumar for the month of July. ITC computation. The time of supply of services provided by Mr. Kumar to Mr. Ram. Then, if instead of opting for regular scheme, Kumar opts to pay tax under section 10(2)(a), that is composition scheme. So related to something, time of supply, invoice, ITC, composition scheme, they have asked the questions. Now, read it. Mr. Kumar started interior designing practice from the month of January. His turnover up to the month of March was 12,50,000. On 30th June, his turnover exceeded 20 lakhs and reached to 20,05,000. So that date is crucial date because the threshold limit for registration is 20 lakhs. And as and when the threshold limit crosses 20 lakhs, a person is liable to get registered. And on 30th June, the liability to pay GST arises and the liability to get registered arises. Now, he is making application for registration on 15th July. 15th July is the application date. And registration is granted to him on 25th July. Now, so 30th June is the date on which he is liable to register. Liable to register is 30th June. Then we have this application. When they made the application for registration is made on 15th July. Application is made on 15th July and certificate is granted. Certificate is granted on 25th of July. And This is about the first paragraph. Then second paragraph. On 16th July, he entered into contract for designing the flat of Mr. Shyam. The service was completed on 22nd July. So he entered into contract for designing the flat of Mr. Shyam, and the service is completed on 22nd July. And Mr. Kumar issued invoice on the same day for 6 lakhs. On 5th July, Mr. Kumar purchased capital goods amounting to 4 lakh 50. And from 25th July to 31st July, he availed services amounting to 1 lakh 75 for the purpose of completing the service. So this is related to his outward supplies and inward supplies. On 1st August, Mr. Kumar got another contract for interior designing of Mr. Ram, which he accepted on 2nd August. The service was completed on 6th August and the invoice was issued on 7th August. Payment was received on 29th August. Again, related to an outward supply, they gave the details. All values are excluding taxes unless specifically mentioned. Mr. Kumar makes only intrastate outward supply and all purchase are also intrastate. Rates of tax are CGST 9% and SGST 9%. In relation to above, answer the following questions. Effective date of registration. Now, we need to know the background provision related to this. That is question number 2, MCQ 1. What is the effective date of registration? That is given in section 25. Effective date of registration. Effective date of registration. This information related to effective date of registration is given in section 25, read with rules. Rules not required. Remember section 25. That is, if application is made within 30 days. If application is made within 30 days from the date when liable. If application for registration, if application is made within 30 days, from the date such person is liable to register, then in this case, if application is made within 30 days from the date when such person is liable to register, then in this case, concentrate. Application is made within 30 days. So I will have here, thanks for your concern, I will have water. If application is made within 30 days from the date such person is liable to register, the date such person is liable to register should be taken, okay? So what should be taken as the effective date of registration? That is date on which such person is liable to register. Such person is liable to register. Suppose if application is not made within 30 days, otherwise, that is application not made within 30 days, then certificate of registration, date on which certificate of registration is granted. Certificate of registration is granted. So that should be taken. Now, this is the effective date of registration provision. Now, go to the question. When the person is liable to register 36, when the application is made 15/7, whether the application is made within 30 days, exactly, the application is made within 30 days, therefore, what is the effective date of registration as per that section? The date such person is liable to get registered. When that person is liable to get registered, 36. Therefore, the answer is 36, 30th June. The date that person is liable to get registered as the application is made within 30 days. Then next, Mr. Shyam can issue revised tax invoice till. So we have something called as revised tax invoice. So related to MCQ 2, I am just explaining that concept. So concentrate. That is revised tax invoice. What is that revised tax invoice? Listen, in the present case, he commenced business on one date. Okay. So same question I am taking to explain about revised tax invoice. He commenced business on one date, that is month of January. So he commenced business in the month of January. So when he commenced business in the month of January and exactly on one day he is liable to register. What is that? 30th June, he exceeded the threshold limit. Means up to 30th June. Up to 30th June. So his threshold limit would have been less than 20 lakhs. So here the aggregate turnover has exceeded the threshold limit. Has exceeded the threshold limit. And what is the threshold limit? 20 lakhs is the threshold limit. So this is the date on which he is liable to get registered. Liable to get registered. Now, he need to make application for registration within 30 days. And what has happened? He is making application for registration on one date, that is 15th July. He is making application for registration. Application date. And when he gets the registration certificate that he got is on 25 July. So RC, registration certificate, is on 25/7, which means the GSTIN is known from 25/7 only. GSTIN is known only from 25th July. Then until that point of time, he will be making outward supplies. He will not stop his business. So up to 36, no GST payable on outward supply. No GST on outward supplies. No GST on outward supplies. But GST payable on outward supply with effect from 36. GST payable on outward supply. GST payable on outward supplies. GST payable on outward supplies from 36. But invoice cannot be issued. Why invoice cannot be issued? But invoice cannot be issued. Invoice cannot be issued because he don't know what is his GSTIN. That is known only on the date of certificate of registration, and he cannot give tax invoice before that date. So he can give tax invoice only after that date. So therefore, but invoice cannot be issued. GST is payable on outward supply, but invoice cannot be issued. So he will give a revised tax invoice within 1 month after the date certificate is granted. Okay. So what he will be doing here? He got the certificate of registration on one date. Now he will be from that date within 1 month. He will give revised tax invoice with respect to these outward supplies. With respect to these outward supplies, revised tax invoice is issued after this date. Revised tax invoice. Revised tax invoice. When revised tax invoice shall be issued? Within 1 month. Within 1 month. From when? Within 1 month. From when? Within 1 month from the date certificate is granted. So when certificate is granted? 25/7. When 25/7 registration is granted, then within 1 month means 25/8. 25/8 they need to give revised tax invoice. So 25/8 revised tax invoice should be issued. So that is the answer here. 25/8, that is 25th of August is the answer. So Sham can issue revised tax invoice till, that is 1 month from the date of certificate of registration. Within 1 month, from the date of certificate of registration. Certificate of registration. That is about this. Then eligible input tax credit available with Mr. Kumar for the month of July. Now let's take the July data. July, what is the inward supplies? So Mr. Kumar purchased capital goods amounting to 4,50,000, and from 25th July to 31st July, he received some services amounting to 1,75,000. So on that he can take ITC. He can take ITC because the certificate is granted to him on which date? On 25th July. So from 25th July, whatever he is purchasing, on that he can take ITC, no doubt about it. So on 1,75,000 can he take ITC? Yes. And even on 5th July, whatever he purchased also he can take ITC, because the effective date of registration is 36. As the effective date of registration is 36, he can take ITC even on purchase as on 5th July. So for capital goods, so how much is the rate of tax? 9%. So 4,50,000 plus 1,75,000 into 9%, that comes to 56,250 CGST and 56,250 SGST. So ITC can be availed on all inward supplies on or after the date the person is liable to get registered. So MCQ 3, ITC can be availed on inward supplies. ITC can be availed on inward supplies after effective date of registration. After effective date of registration. So what is the effective date of registration in this case? The effective date of registration in this case is 25th of July. 30th of June. So therefore from 30th of June, whatever inward supplies they make, they can take ITC with respect to it. So total 56,250. How 56,250? 4,50,000 plus 1,75,000. So total, that is 4,50,000 plus 1,75,000, that is 6,25,000 into 9%, that is CGST, into 9%, 56,250 CGST can be taken as credit. Then time of supply of services provided by Mr. Kumar to Mr. Ram. Mr. Kumar to Ram, please see. So Kumar to Ram, which one? On 1st August. Kumar got another contract for interior designing, which he accepted on 2nd August. The service is completed on 6th August. An invoice was issued on 7th August. Payment is received on 29th August. What is that we need to determine? Time of supply. Time of supply in case of services is determined under section 13 subsection 2. It is not RCM, FCM. Time of supply in case of services covered under FCM. Covered under FCM. How to determine? First we need to check whether invoice is given within the time. Actual date of invoice is within due date of invoice or not, we need to check. If actual date of invoice is within due date of invoice, if the answer is yes, we need to take actual date of invoice or date of payment, whichever is earlier. So when actual date of invoice is within due date of invoice, we need to take actual date of invoice or date of payment, whichever is earlier. No. If the actual date of invoice is not within due date of invoice, then we need to take date of completion or date of payment, whichever is earlier. This is the provision. Whichever is earlier, that is the provision. Now, what is the due date of invoice in this case? Due date of invoice is given under section. Due date of invoice, DDY means due date of invoice, that is given. This provision is given in section 13 subsection 2, whereas due date of invoice is given in section 31 subsection 2. And what does it say? If it is banking and other financial services, banking sector, insurance sector. If it is banking sector, insurance sector, 45 days from date of completion. 45 days from date of completion. Other sectors, invoice to be given 30 days. 30 days from date of completion. Okay. So now, this is the provision. What is happening here? You please check. 6th August service is completed. 7th August invoice is issued. So invoice is issued on time, 30 days. Invoice is issued within 30 days. Invoice issued within 30 days. Within 30 days from date of completion. From date of completion. Therefore, what is the provision? Actual date of invoice or date of payment, whichever is earlier. Whichever is earlier. So what is the actual date of invoice? The actual date of invoice is 7th August, payment is 29th August, so whichever is earlier, 7th August should be taken as the time of supply. So this is a provision related to that. Then next, if instead of opting for regular scheme, Mr. Kumar opts to pay tax under section 10(2)(a) of CGST Act, the tax liability for the month of July will be, simple here. We need to take their outward supply. After crossing the threshold limit. So as on 30th June, how much it is? 20,05,000. That is for June month over. Now quarter. So quarterly GST is payable. So 30th June over. Now in July, what is the supply they have made? They have made supply 6 lakhs. They have made supply 6 lakhs in July. Sir, what about this supply? This is in August. This 5 lakhs is in August. So not in July. But that 6 lakhs is in July. Are they asking quarter or month? They are asking for the month. They are not asking for the quarter. So we need to calculate for the month. For the month of July, how much is the supply they have made? So 6 lakhs. Suppose if they are asking for the quarter, that is July to September, then even August data will be taken. But we are calculating that they are asking only for July. So we need to take only for July, 6 lakhs into. What will be the rate? If they are under composition scheme section 10(2)(a), the applicable rate will be 3% CGST and 3% SGST. So therefore, CGST shall be 6 lakhs into 3%, that is 18,000. So we have composition scheme under 2 sections here. So I am just giving you a brief information related to MCQ 5. We have composition scheme. Under 2 sections. So section 10 subsection 1, and section 10 subsection 2a. This is an important amendment. Previously we had notification 2/2019. Now they have subsumed that into section 10 subsection 2a. That notification 2/2019 is abolished. So now the entire section 10 got revamped. So that is an important amendment. So you please go through that. Okay. So section 10(2)(a). Then to whom it is applicable? So this section 10 subsection 1 is applicable to a manufacturer, and it is applicable to a trader and supply of food. So for 3 people this is applicable. That is section 10 is applicable. Text section 10 subsection 1 is applicable for 3 people. That is manufacturer, trader, supply of food. Whereas section 10(2)(a) is applicable for other service providers. What is the rate? The rate is simple. It is 3% CGST and 3% SGST on taxable turnover. Very important here, it is not on total turnover, it is on the taxable turnover. So this we need to take on the taxable turnover. How much is the taxable turnover on the 3% CGST, 3% SGST? If they are manufacturer, they need to take, 1% on total turnover. Means what? 1% on total turnover means 0.5% CGST, 0.5% SGST. Trader, 1% on taxable turnover. 1% on taxable turnover. And supply of food, 5% on total turnover. 5% on total turnover, and it is like 0.5% CGST, 0.5% CGST and 0.5% SGST, like that. Okay, 0.5% CGST here, 2.5% CGST. That is the meaning. So 1% means 0.5% CGST, 0.5% SGST. So these are the rates. So when a person is under composition scheme, that too they need to pay GST on a quarterly basis. GST payable on a quarterly basis. On a quarterly basis. So this is the information related to composition scheme. So what we are doing for the month of July, they asked, that is 10-2A. 10-2A rate is what? 3% CGST, 3% SGST on taxable turnover. That's what we have multiplied. Okay. Then, so this is about second MCQs. We have completed case scenario MCQ. Now what we have is that 1 mark MCQ or 2 mark MCQs. So that we are seeing. Look into this question number 3. During the month of May, Z Limited sold goods to Y Limited for rupees 2,55,000 and charged GST at the rate of 18%. However, owing to some defect in the goods, Y Limited returned the goods by issuing a debit note of 40,000 rupees in the same month. Z Limited records the return of goods by issuing a credit note of 40,000 plus GST in the same month. In this situation, the GST liability of Z Limited for the month of May will be. So here we have something called as debit note and credit note. Who will be giving credit note to whom? So debit notes and credit notes are given by supplier to recipient. So whenever there is an increase in the invoice value, debit note will be given by supplier to recipient. What will happen because of issuing debit note? Because of issuing debit note, I will be having an additional liability. Then whenever credit note is issued, again who will give? Credit note issued by supplier to recipient. Whenever credit note is issued by supplier to recipient, liability will come down. Okay. So debit note by supplier to recipient, what will happen? So we are now discussing information for third question. So supplier to recipient, there are 2 documents. Supplier to recipient, there are 2 documents, that is debit note. What will happen when debit note is issued? GST liability increase. Why? Because to collect extra amount, they will give debit note. To collect extra amount. To collect extra amount than invoice. To collect extra amount than invoice, they give debit note. What will happen to the supplier because of this? To the supplier, liability will increase. So to the supplier and to the recipient. To the supplier and to the recipient. What will happen to supplier? So supplier liability increases. So because of this debit note, so supplier's liability increases and recipient ITC balance increases because recipient can take ITC on the basis of debit note. Then there is another document called as credit note. Why credit note is issued? To reduce invoice value. To reduce invoice value. Now, what will happen to the supplier? Supplier liability will come down. Supplier's liability will come down. What recipient should do? Recipient should reverse the ITC. Recipient should reverse the ITC. So the ITC balance of the recipient will come down. So this is the effect. Now look into the question. What has happened? Supplier sold some goods and recipient has returned the goods. When recipient returned the goods, supplier will be giving credit note. Supplier issues credit note. For how much? 40,000 plus GST. To that extent, liability will come down. So what is that? 2,55,000. 2,55,000 is the actuals. Now, credit note balance you reduce. Because of giving credit note 40,000, I told you liability will come down. So, what is that? It is 2,15,000. Now, on the 2,15,000, you calculate 18%. 2,15,000 into 18%, that is 38,700. So, option B is the answer. Then, question number 4. C and Company, a registered supplier in Delhi, opted for composition levy under subsection 1 and subsection 2 of section 10 of CGST Act. It sold goods in the fourth quarter of a financial year for 15 lakhs exclusive of GST. The applicable GST rate on these goods is 12%. So what is that? They are opting for composition scheme, section 10. And they sold goods in the fourth quarter of a financial year, 15 lakhs. I told you, for a trader, what is the rate of GST? 1% on taxable turnover, 0.5% CGST, 0.5% SGST. The applicable rate of GST on these goods is 12. Irrelevant. Irrelevant. Why? We will not take 12% rate. We will take the rate applicable to them. What is the rate applicable to them? Already we discussed that concept. That is 1%. That is 0.5% CGST, 0.5% SGST. So 12% irrelevant. C and Co purchased goods from Ramesh and Co registered in Delhi for 9,55,000, on which Ramesh and Co has charged CGST of 57,300 and SGST of 57,300. C and Co has also purchased goods from E and Co registered in Haryana for 2,46,000, on which E and Co has charged IGST of 29,520. Now, you need to understand some important point, that is, in case of composition scheme, can a person who is opting for composition scheme avail ITC? No. So please see, composition scheme, important points that is touched here. Some important points in composition scheme are touched in this question. What is that? Number one, that is, a person opting for composition scheme. A person opting for composition scheme cannot avail ITC. Cannot avail ITC. So there is no point in giving the inward supply details in that question, because they cannot avail ITC. Then next point, they need to pay GST on outward supply. Pay GST on outward supply at reduced rates. At reduced rates. What is that reduced rates? We discussed manufacturer, trader, supply of food, etc. Then next, on inward supply, pay GST on inward supply, covered under RCM, at applicable rates. At applicable rates. What does it mean? It means I am under composition scheme. I need to pay GST on outward supply at the rate of 1%. But on my inward supply, I need to pay GST. If I am liable to pay GST under RCM, I need to pay GST at the rate applicable to that inward supply. Okay? Then, so pay GST on inward supply covered under RCM at the applicable rates. So covering these 3 points only, they have framed that question. So now, on this entirely ITC not available. No need. Nowhere it is RCM given in the question. Please check if you want. You check the question. Nowhere it is given as RCM and all. So therefore, forget about that RCM. So RCM not given. So forget about that. Only liability is 15 lakhs. Only liability is 15 lakhs. So on that 15 lakhs, we need to pay 0.5% CGST. 0.5% CGST. So 15 lakhs into 0.5%, 7,500 is the answer. So option A is the answer for this. Then number 5, Mr. Raghu avails service of Mr. Raja, a chartered accountant, as under audit of financial accounts, tax audit and annual filing, income tax return filing of Mr. Raghu's wife. Then all the amounts are exclusive of taxes, and applicable rate of GST on these services is 18%. The accountant of Mr. Raghu booked the entire expenses of 70,000 rupees plus GST in the books of accounts. Mr. Raghu is eligible to take input tax credit of how much? What we all will think, we will take this total Chartered accountant service, ITC available. So 55,000 plus 10,000 plus 5,000, that comes to 70,000. So take 70,000 and multiply with 18%. So that is equals to into 18% equals to 12,600. And we have the option 12,600. No. Then what is the answer? This is wrong approach. First, check out of these three, is everything related to Mr. Raghu's business? So audit of financial accounts related to Raghu's business, tax audit and annual filing related to Raghu's business, but income tax filing of Mr. Raghu's wife is not related to Raghu's business. Therefore, only with respect to these two, GST paid can be taken as ITC. So into 18%, that is equals to, so 65,000 into 18%, 11,700. On that 11,700 only, ITC can be availed. Understood? So now, what is crucial here? We need to avail ITC. This is given in section 16 subsection 1. The information in this MCQ is based on section 16 subsection 1. Conditions for availment of ITC. Conditions for availment of ITC. So in that, as per section 16 subsection 1, so we have one condition. Inward supplies should be used in the course or furtherance of business. Inward supplies should be on which ITC to be availed. ITC to be availed should be used. Important word, used or intended to be used. Used or intended to be used. Intended to be used. Used or intended to be used. Not just used, intended to be used. I am not using now, I may be using in future. Used or intended to be used in the course or furtherance of, business. Whose business? That person's business who wanted to take ITC. So it should be in the course. Or furtherance of business. Whose business? So business of the person availing ITC. Okay. But in this case, what has happened? Raghu's wife, how expenditure incurred there will be connected to Raghu's business. It is not connected. That's the reason why the answer for that is 11,700. Then number 6, TT Private Limited, registered in Rajasthan, furnished following information for the month of June. Interstate sale of goods for 1,25,000 to JJ Enterprises registered in Haryana. Interstate sale of goods. Interstate means IGST liability, remember. Interstate purchase, again IGST credit, remember. Intrastate purchases, so that is CGST, SGST paid. Now, the applicable rate of GST is 18%. All the above amounts are exclusive of taxes. GST liability payable in cash. This is purely practical question, application oriented question, nothing is involved. I am writing the answer here itself, please see. CGST, SGST, IGST. Now, liability. If you see liability, what is their liability? Interstate sale of goods, 1,25,000. So 1,25,000 into 18%. 1,25,000 into 18%, that is 22,500 is the IGST liability. When liability is IGST, how you will get CGST, SGST as liability? That option A is wrong. Then option B is wrong. Option D is wrong. Option C is only correct. Giveaway. Directly we can get the answer because the liability is IGST. Even though credit may be there, concentrate. Even though credit may be there, what is the use of that? Definitely the net liability will be IGST. So the IGST is how much? 3,600. So only IGST, one option is only there. That is only correct answer. If they have two IGSTs given, then that would have been the correct answer. So ICAI made a giveaway here. Easy. By seeing the question itself, we can arrive at the answer. So option C is the answer in this case. Option C is the answer. If you want, you check. Minus ITC. So what is it they are doing? Interstate purchases. So 40,000 into 18%. 40,000 into 18%, that is 7,200. Then within the state they purchased 65,000 into 9%. 65,000 into 9%, that is equals to 65,000 into 9%, 5,850, 5,850. Now we can adjust even CGST credit and SGST credit for payment of IGST liability. So see that 22,500 minus, first IGST liability should be adjusted, 7,200 minus 5,850 minus 5,850, that is equals to 3,600. So the balance liability will be 3,600. IGST credit, CGST credit can be used for payment of IGST liability, and SGST credit can be used for payment of IGST liability. So 3,600. Actually, we don't have to do computation. Directly we can arrive at the answer for this. Then question number 7. Pradeep Traders registered in Haryana sold goods for 2,05,000 to Balram Private Limited registered in Uttar Pradesh. GST is leviable at the rate of 5% on the said goods. As per the terms of sale contract, Pradeep Traders has to deliver the goods at the factory of Balram Private Limited. For this purpose, Pradeep Traders has charged freight of 2,400 from Balram Private Limited. So now we need to understand here, supplier is delivering. Supplier is liable to deliver the goods to the recipient's place. When supplier is liable to deliver the goods to the recipient place, whatever is the freight, that will be included in the value. So we have section 15 subsection 2 clause C. So any expenses incurred by the supplier to the recipient, any expenses incurred by the supplier to the recipient. I am just writing the provision. Listen. So sixth one is nothing but practical question. Sixth one is a practical question, and that is just application oriented. So there is nothing great in that. Now seventh question, what is the provision that is applied? I am explaining. Concentrate. That is, we have something called as inclusions in value. That is section 15 subsection 2 clause C. Related to that only they have given this. What is that? Expenses incurred by supplier, expenses incurred by supplier and recovered from recipient. So supplier has incurred some expenses and it is recovered from the recipient. Now we need to divide that into two. What are those expenses? Incidental expenses or other expenses? Incidental expenses or other expenses. If it is incidental expenses, it is to be always included in the value. What is the meaning of incidental expenses? Without which we cannot render the service, or without which we cannot make the supply. That is known as incidental. So which are necessary. What are other expenses? Even without that we can make the supply. So incidental expenses and other expenses. If it is incidental expenses, to be included in value always. Always it is to be included in value. If it is other expenses, divide it into two. Where is it incurred? When is it incurred or charged? Charged before or at the time of delivery of goods or supply of services. Charged before or at the time of delivery of goods or supply of services. Charged before or at the time of delivery of goods or supply of services. Then also it is to be included. then also it is to be included in value. Then also it is to be included in value. Otherwise means what? Otherwise means it is charged after delivery of goods or supply of services, not to be included in value. Not to be included in value. Now if you see in this question, transportation charges are incurred before delivery of goods. For that goods, transportation charges is not incidental. Even without transportation charges, goods are there. But those transportation charges are other charges, and that is incurred or charged before delivery of the goods. Therefore, it is to be included. So take 2,05,000 and 2,04,000 to be included. And total 2,07,400. This is the value. On that you need to multiply GST rate. What GST rate? Is it separately 2,05,000 5% and 2,400 12%? No. See, this is not a standalone supply. This transportation is not a separate supply. It is expenditure incurred by the supplier and recovered from the recipient. So we need to take the article, main article. What is the main article? 5%, that only to be taken, like composite supply. So for composite supply, we will take the rate of principal supply, that is 5%, that should be taken into 5% equals to 2,07,400 into 5%, that is 10,370 in that CGST, because it is within the state. They are also located in Haryana, and even the recipient is also located in the same state. Please check. No, recipient is located in Uttar Pradesh. Then CGST, SGST will not come, because supplier is in Haryana and recipient is in Uttar Pradesh. Therefore, it is an interstate supply. And chargeable to IGST, because location of supplier is in Haryana. Sir, but I don't know how to determine the place of supply. Simple, take place of supply as the location of recipient, because place of supply topic is not there for CA Inter. So place of supply is Uttar Pradesh. So therefore it is an interstate supply and chargeable to IGST 10,370 rupees. Then question number 8. Prem and Sons has taken GST registration on 1st January but failed to furnish GST returns for the next 6 months. Owing to this, the proper officer cancelled its registration on 25th July and served the order for cancellation of registration on 31st July. Now, Prem and Sons want to revoke the cancellation of registration. Prem and Sons can file application for revocation of cancellation on or before. So, as per section 30, I am writing the provision here itself. Okay, I'll write, because everything I am writing in a separate place now. So, number 8, as per section 30, application for revocation. See, whenever officer cancels the registration, from the date of that order of cancellation, we can make application within 30 days. Application for revocation of cancellation should be filed within 30 days. From the order of cancellation. So then, in this case, what is the order of cancellation? The order of cancellation is 31st July. Add 30 days to it. So when you add 30 days to it, it is 30th of August. So that is 30 days from 31/7. Don't count 31/7. So remaining 30th of August. So option A, 30th of August is the answer for this. Then 9. XX registered in Delhi purchased books from PC traders registered in Uttar Pradesh. Books are exempt from GST. Okay. XX arranged the transportation of these books from a GTA for which charged a freight of 9,000 for the same. GST payable at the rate of 5% on such GTA services. Which of the following statement is correct in the given context? See, there are two options available to GTA services. In case of GTA services, there are actually some exemptions and something remaining will be RCM. So we are now discussing about the GTA services. We are now discussing about GTA services. See, I am taking it for the lecture will go up to 7:30. Kindly manage, because I want to discuss the other topics also. If you want to leave also, you can leave, because there are a lot of other areas to be discussed. So that's the reason why by 7:30 I will complete. Is that okay for you? If you say like I need to complete by 7, I will complete by 7 also. So GTA services is divided into two. So there are 5 exemptions. There are 5 exemptions. Number 1, specified goods. If they transport, GTA refers to goods transport agency services. If they transport specified goods, it is exempted. Suppose if they transport consignment in a single carriage, if they transport consignment in a single carriage, and if the freight charged is less than or equals to 1,500, then it is exempted. Then number 3, there is a consignment, and that consignment belonging to is transported in multiple carriages, and same consignee belongs to the same consignee. If the freight is less than or equals to rupees 750 per carriage or per note, so 750 for every time, okay, because we are transporting in multiple carriages. If it is less than or equals to 750, then also it is exempted. Number 4, that is services to GTA services to central government, state government, union territory, local authority or governmental authority. Central government, state government, union territory, local authority, governmental authority, registered only to deduct TDS. So then also it is exempted. Number 5, services to unregistered individual, HUF, AJP. So artificial juridical person, not having a factory. So services to unregistered individual, HUF and AJP not having a factory. In these 5 cases, it is exempted. In all other cases, it is taxable. So GTA services, in these 5 cases, it is exempted. In all other cases, it is taxable. Okay, it is taxable. Then who will pay GST? There are 2 options available to the GTA. 2 options are available. They can choose. Who can choose? GTA can choose. Goods Transport Agency can choose. Option 1, FCM. Option 2, RCM. So RCM means who will pay GST? Liability to pay GST is on recipient. Okay. Now, what are those specified goods? So those specified goods are easily remember. First 3 related to food, agricultural produce. Then number 2, organic manure, and number 3, that is food grains including flour and pulses, comma, milk and salt. Milk and salt. And number 4, 2 equipments you remember, that is defense or military equipment. Defense or military equipment. Then number 5, that is relief materials. Relief materials for disasters. Relief materials for natural or man-made disasters. Number 6, newspapers. Newspapers and magazines. Newspapers and magazines. These are the 6 specified goods. Now, actually what they are transporting is books. Books is not there in the specified goods. Books is not there in the specified goods. Therefore, there is no exemption. And freight is 9,000. But we don't have 9,000 freight and all. Either it will be 1,500 or 750. So therefore, it will be taxable there. That exemption also not there. Now, the recipient is not an individual. The recipient is not an individual. They are registered. So therefore, definitely XX registered in Delhi purchase books from PC traders, and the services are rendered to whom? XX. So therefore, definitely they are registered and not government. So we don't have any exemption. So therefore, it is taxable. And who is liable to pay GST? GST is payable by the recipient. Now, which of the following statement is correct? GST of rupees 450 is payable by XX on reverse charge basis. Correct. Because GTA did not opt for payment of GST under FCM. Please check the question. They did not opt for. Supply of goods and supply of services is a composite supply, wherein supply of goods is principal supply and principal supply is exempted supply. No tax is payable on freight. No, wrong. Stupidity. Since exempted goods are being transported, service provided by GTA for transporting the same is also exempted. No, nothing like that. We don't have such provision. GTA 450 is payable by GTA only if they opt. Only if they opt to pay GST under FCM. Are they opting? No. Which means this is also not correct. So only option A. Then Kaleem and Associates made an application for cancellation of GST registration in the month of March due to closure of its business. Its application for cancellation of GST was approved on 14 September. So when is it approved? Cancellation is approved on 14 September. In the given case, Kaleem and Associates is required to file a final return. So they are asking the due date of filing final return. So we have a concept. So please listen. That is, final return is a return to be filed in GSTR 10. Final return is a return to be filed in GSTR 10 when in case of cancellation of registration. In case of cancellation of registration. In case of cancellation of registration. And what is the time limit within which it should be filed? So it should be filed, concentrate, within 3 months from the date of cancellation. Within 3 months from the date of cancellation. From the date of cancellation or order of cancellation 3 months from the date of cancellation or order of cancellation, whichever is later, not earlier, whichever is later. This is the time limit. This is the time limit for filing GSTR 10. For filing GSTR 10, this is the time limit. So in this case, what has happened? So 14 September, 3 months you count from there. October, November, December. So 14th December, simple, required to file annual return on or before 14 December. We don't have the order of cancellation. So 3 months from the date of cancellation. So with this, we completed all MCQs. Now we are moving on to the descriptive questions. For descriptive questions, as the answers are anyhow there, so I am just showing you from the answer and I am explaining, okay? So look into this. Question number 11, A. Babla and Bros is exclusively engaged in making exempted supply of goods and is thus not registered with GST. On 1st October, the exemption available on the goods gets withdrawn. On that day, the turnover of Babla and Bros was 50 lakhs. Examine the eligibility of Babla and Bros for availing ITC, if any. Now, in this case, what is that we need to understand? So, first, they are liable to get registered. Actually, this is application of section 18, subsection 1, clause A. Okay, so there is something called as 18 subsection 1 clause A, availment of ITC on closing stock. And second question is also actually related to that. Mamata Sales trades in exempted goods and provides taxable services. It is registered under GST. On 1st October, the exemption available on its goods gets withdrawn. Analyze the scenario and determine the eligibility of Mamata Sales for availing ITC, if any, on inputs and or capital goods used in supply of exempted goods. Now, actually, you need to know, this is a question related to section 18, subsection 1, availment of ITC on closing stock. This is a question related to availment of ITC on closing stock. That is given in section 18 subsection 1. There are total 4 situations wherein we can take ITC on closing stock. There are total 4 situations wherein we can take ITC on closing stock. Okay. So these 4 situations are given in 4 clauses, section 18.1a, section 18.1b, and section 18.1c, and section 18.1d. So we are now analyzing the situation. What is the situation where we can avail ITC on the closing stock? First, what is the situation that we need to know? So listen carefully. A person liable to get registered and got registered, that is made application for registration within 30 days. Liable to register. So a person is liable to register. Please concentrate. A person is liable to register and applied within 30 days. Then we get this section 18.1a. 18.1b, voluntarily got registered. That is 18.1b. Then registered person migrated from composition scheme to normal scheme. RP, registered person migrated from composition scheme to regular. That is 18.1c. 18.1d, registered person outward supply became taxable from exempted. Okay, became taxable from exempted. Now, in these 4 situations, they can avail ITC on closing stock. What is the meaning of closing stock? On which ITC can be availed. Listen carefully. In this case of 18.1a and 1b, it is same. For 18.1a and 1b, it is same. For 18.1c, 1d, it is same. What is the closing stock? We have raw material lying in stock. Okay, here also same. Raw material lying in stock. Then raw material in WIP lying in stock. So we need to take closing stock. What is the closing stock? Raw material as such. Or WIP, in the WIP we need to take what is the raw material content. Raw material in WIP lying in stock. Raw material in FG lying in stock. So raw material lying in stock, raw material in WIP lying in stock, raw material in FG lying in stock. But capital goods we cannot take ITC, whereas in 181C1D we can take ITC on capital goods which is in the closing stock. So raw material in WIP lying in stock, and raw material in FG lying in stock, then capital goods. So extra point what we have is capital goods here, because on capital goods also we can take ITC. On capital goods also we can take ITC in 181C1D, but in 181A1B not possible. So now we need to know what is the given situation here. Babla and Bros is exclusively engaged in making exempted supplies. Don't rush. Exempted supply means 181D. No, wait. And is thus not registered. So when 181C1D is applicable, so they should be registered person. Then only 181C1D applicable. They are making exempted supply. Their exempted supply become taxable, but you cannot apply 181D. You have to apply 181A because they are not registered person. If they are already registered, then you can apply 181D. Please see, they are not registered. Now only they are getting registered. On 1st October, the exemption available on its goods gets withdrawn. On the day the turnover was 50 lakhs. Means they cross the threshold limit and they are engaged in supply of goods. The turnover limit is 40 lakhs and they got that 40 lakhs. They need to register. Examine the eligibility of Baba and Bros for availing ITC. So if they make application within 30 days, they can avail ITC on closing stock. What closing stock? Inputs. As such, inputs in WIP, inputs in FG. Got it? Then, whereas B, Mamata sells traders in exempted goods and provides taxable services. They are dealing both. It is registered. So already they are registered. Concentrate. They are already registered. Now the exemption is withdrawn. So the exemption is withdrawn means their exempted supply becomes taxable. So 181D will apply. So in the second case, that is B point, 181D is applicable. So they can take ITC on the capital goods also. In addition to inputs, they can take ITC on capital goods. So this is what you need to write as answer. Okay. Now, very good question actually it is, because they are really testing whatever we are learning. Okay. Then question number 12. Sir, for you it is good only, sir, because whatever you have learned it is tested. But for us, no, yaar, these are all simple points only. They did not go so much deep. If at all I set a question paper, if I get a chance to set a question paper, I set a question paper to my satisfaction so that no student will clear. Okay, so that much we can test, but not required. These are all basic only. Suhasini is a registered software consultant. Question number 12. On account of her ill health, she could not provide any services during the month of October. However, she had to incur all the expenses related to her office. Okay. She paid 75,000 to various vendors. Total GST involved on the goods and services procured by her is 13,500. So on inward supply, 13,500 is the ITC. She paid GST. Out of the total bills paid by her, one bill for 15,000 relates to security services availed for security of her office, tax on which is payable under RCM. Yes, security service is under RCM. So she paid GST under RCM. GST involved in such bill is 2,700. So she pays 2,700 under RCM. Suhasini is of the opinion that for the month of October, no GST is payable from electronic cash ledger as she has sufficient balance of ITC for payment of GST on reverse charge on security services. Do you think Suhasini is right? Explain with reasons. In MCQ, we did one discussion. What is that? Whatever GST that is payable under RCM cannot be paid using the credit ledger. We can use only the cash ledger for payment of that amount. Correct? So 13,500 cannot be used for payment of 2,700. 2,700 should be paid only using the cash ledger. So credit ledger cannot be used. But the 2,700 paid can be taken as ITC in addition to 13,500. Okay. Like that. Those 3 points you have to write for this and you will get marks. Then next. XY of Kolkata is engaged in supply of various goods and services. Now listen here, having said this, having said the answer, if I am not telling you the presentation, then I am making a big mistake. So these two questions are known as case study type questions. These two questions are known as case study type questions. So presentation plays a major role in CA exams. So because the valuer don't know anything about you, your answer sheet speaks, nothing else. Even you also don't know anything about me till the time you watch the lecture. And after you watch the lecture, you will frame one opinion. Okay, he is one idiot, he is not having knowledge. Or okay, he has some okay knowledge. No, he has some good knowledge. Like that you frame an opinion. So like that also, valuer, when he takes an answer sheet, he don't know whether you got all India first rank in inter, like from foundation, or you are a school topper. He don't know all these things. What he know is the answer sheet. So they see the paper and how are you presenting. So for case study based questions, how should we present? Remember a 4-point approach. Number 1, you need to give the reference. For example, that section 18.1 related question is there, na? So you need to write as per section 18.1a of CGST Act. Sir, I don't know the clause. Don't worry. 18 subsection 1. Sir, I don't know the subsection. At least 18. I don't know 18 also. At least as per the provisions of CGST Act, you start that way. At least, minimum, yeah. So at least that. As per the provisions of CGST Act. So as per section 18, subsection 1, clause A of CGST Act 2017. A person who is liable to get registered and is making application for registration within 30 days can avail ITC with respect to inputs lying in stock, inputs in WIP which is in stock, inputs in FG which is in stock immediately before the date he is liable to get registered. In the present case, okay, so what you are doing? First you are giving reference, second you are writing provision. So reference and provision you need to write. Then you need to start in the present case. Babla and Co. So they have made an they are liable to get registered from the date when the exemption is withdrawn because their aggregate turnover is 50 lakhs and the applicable threshold limit is 40 lakhs and they are liable to get registered from that date. And if they make application within 30 days from that date, then they can avail the ITC on closing stock. So discussion. And finally, you give the conclusion. Therefore, ITC available on this, like that. Got it? So same way, for another question, what is that? Just now we have discussed RCM question. For that also same presentation. All RCM related provisions are in section 16. That is ITC related to RCM. Is in section 16 and 49. Suppose, sir, very difficult, sir, that many sections I cannot remember, at least write, as per the provisions of CGST Act. Tax paid under RCM can be availed as ITC if the conditions for availment of ITC are satisfied. However, such tax payable under RCM cannot be paid using the electronic credit ledger, but it can be paid only using the electronic cash ledger. Like that, you have to write the provision and then give the discussion and conclusion. But it's 4-point approach: reference, provision, discussion, conclusion. If you are ensuring these 4 are present in the answer, what you are writing, no doubt you will get very good marks compared to others. So you see this. Next question, that is 13. XY of Kolkata is engaged in supply of various goods and services. It pays GST under regular scheme and the following information is provided by it for the month of July. Interstate purchases of office stationery 1,40,000. Repairing of lorry used for transport of goods from warehouse to client's premises. So these are all inward supplies. And outward supply data is given. Interstate supply of office stationery 2 lakhs. Intrastate supply of 500 combi packs containing 1 calculator and 1 diary. Intrastate supply of services of business correspondent to Subhavidhi Bank in respect of its accounts in urban area branch. So this is their outward supply. Okay. Now go through these special points, additional points. Okay, see this. The following additional information is provided by XY in relation to the above receipts and payments. 10% of the interstate supply of office stationery are made to unregistered persons. Each combi pack containing a calculator and a diary is priced at 800. The calculator and the diary are individually priced at 700 and 200 respectively. An invoice of 40,000 towards purchase of office stationery is missing and no other tax paying document is available in respect of such goods. All the figures mentioned above are exclusive of taxes wherever applicable. Now, this is the question. Now, we need to arrive at the answer for this. Rates are given and subject to the information given above, all and conditions for availing ITC is fulfilled. Details of opening balance of ITC is given. Compute the minimum net GST as the case may be payable in cash by XY for the month of July. Now, so in this case, we need to arrive at the computation part. So please see, that is XY of Kolkata is engaged in supply of various goods. So outward supply data we need to take. What is the outward supply? Interstate means it is IGST liability. Interstate means it is IGST liability. So on 2 lakhs IGST payable and IGST at the rate of here on office stationery everything it is 18% only. On dairy only it is 28%. So therefore it is IGST liability at the rate of 18%. Then intrastate supply of 500 combi packs means CGST, SGST. CGST and SGST. And what is the rate that we need to take? Please see, it's a combi pack. Combi pack of what? Calculator and 1 dairy. Calculator and 1 dairy. So there is a separate price. Each combi pack is priced at 800. The calculator and dairy are individually priced at 700 and 200. Not naturally bundled in the ordinary course of business, because they can sell that separately also, which means we need to treat it as a mixed supply. Mixed supply. So means they are taking 800 and how many combi packs here? 500 combi packs. So 500 into 800, that's where they got 4 lakhs. Now it is a mixed supply and we need to take the highest rate. What is the highest rate? So there are 2 rates. For all things 18%. For dairy it is 28%. So we need to take the highest rate, that is 28%, which means CGST 14, SGST 14. Then intrastate supply of services of business correspondent to Subhavidhi Bank with respect to its accounts in urban area branch. See, actually there is one concept, that is business correspondent or business facilitator services to bank. We have some exemption if the services are in rural area. So about that business correspondent facilitator services, I am just explaining to you. Please have a look into it. There is a bank which has an urban area branch and a rural area branch. So there is an urban area branch and rural area branch. Urban area branch and rural area branch. There is a bank which is in urban area branch, rural area branch, like that we have a division. Now, this bank appointed a business correspondent. This bank appointed a business correspondent, and there is an agent of business correspondent, BC. Agent of BC. Okay. Now, they appointed business correspondent Mr. A for urban area branch and Mr. B for rural area branch. Now, whatever services that are provided by Mr. B, whatever services that are provided by Mr. B, that rural area branch will give commission. See, these people are like intermediaries. These people are like intermediaries, they get commission. And that commission received by Mr. B is exempted if it is from a rural area branch. But if it is from an urban area branch, that is not exempted, that will be taxable. So services are provided by business correspondent to urban area branch, and for which urban area branch paid commission. Urban area branch paid commission. Now, this commission is not exempted. This commission is taxable. This commission is taxable. But who should pay GST? It is given that business facilitator services to bank is only exempted, but is only taxable under RCM. But business correspondent services is not taxable under RCM. It is taxable under FCM. Then who should pay? Mr. A should pay. Same way, agent of business correspondent. So there is a person who is appointed as a agent of business correspondent. That is Mr. X, and Mr. Y. Mr. X and Mr. Y. Mr. X is rendering services. Mr. X is rendering services to Mr. A, for which the payment is received by Mr. X, commission, subagent. This will be taxable. This will be taxable under RCM. Means who will pay GST? Mr. A will pay GST for this. So here you need to understand who is the supplier, who is the recipient. Please be careful in this. So Mr. A is rendering services to urban area branch, for which commission is received, that is taxable under FCM. Mr. X renders service to Mr. A, for which commission is received, that is taxable under RCM. Whereas Mr. Y renders services to Mr. B. Renders services to Mr. B, for which Mr. B pays commission to Mr. Y, and that commission is also exempted. This is in the context of business correspondent. Like business correspondent, there is a business facilitator. Like business correspondent, there is a business facilitator also. So in case of business facilitator services, let's see what will happen. So what we have discussed so far is business correspondent services. Okay, so now we are discussing business facilitator services. Suppose if that person is not a business correspondent but a business facilitator. Actually, business facilitator is also one intermediary. Suppose if that person is a business facilitator, BF, and agent of business facilitator. Now, exemption is same. Whatever exemption applicable to business correspondent, the same exemption is applicable even for business facilitator. But services provided by business facilitator to urban area branch will be taxable under. So this portion will be taxable under RCM. This portion will be taxable under RCM. Whereas services provided by agent of business facilitator to business facilitator will be taxable under FCM. So if you can appreciate this difference, that is sufficient here. So this is the difference here. This is the difference. Okay. This is the difference between business correspondent and business facilitator. Now every student will get confused in this place only. Now what they are doing? Business correspondent services. So we think that in case of business correspondent services, the recipient, that is bank only, should pay GST because it is in RCM. No, business correspondent service is not in RCM. Business facilitator services to bank is only under RCM. So in this case, business correspondent services is taxable under FCM. So this is taxable under FCM. Taxable under FCM. This is one superb twist in the question. Standard. This is what ICAI is. Okay. So now this 1 lakh is intrastate supply, taxable, CGST and SGST at the rate of 9%. So outward supply we got easy. Now inward supply. Inward supply, if you see, intrastate purchase of office stationery 1,40,000, but out of that 40,000 rupees stationery invoice is missing. Then we cannot take ITC on 1,40,000. We can take ITC only on 1 lakh. And that too, it is interstate purchases, means IGST at the rate of 18%. Then next, repair of lorry used for transport of goods from warehouse to client's location. Lorry is not blocked credit. Lorry is not blocked credit. We can take ITC with respect to the lorry purchase, and that too, it is intrastate supply, means on that 1 lakh, CGST and SGST, how much? 8%, 9% and 9%. So now we will put these numbers in the table and we will arrive at the answer. So in the answer, what will happen? There will be some adjustment related to ITC also. So this is the question here, and I'm just showing you the answer. Even there is some opening balances also. There is some opening balance of ITC also. Please see this question. Total tax liability, interstate supply of stationery, 2 lakhs, IGST 36,000, then that combi packs 4 lakhs, 14% CGST, 14% SGST, we take 14% rate. Intrastate supply of service of business correspondent, that is taxable, so 9% CGST, 9% SGST, total tax liability. Now ITC, brought forward ITC is their opening balance we are taking. Interstate purchase of office stationery 1 lakh only, not 1,40,000, because 40,000 rupees invoice is missing. We cannot take ITC, 18,000. Intrastate repair of lorry, so 9,000. So this much. Now concentrate. So now I have 98,000 input tax credit with respect to IGST, but the liability is 36,000. Now what I can do? I have excess credit. What I can do with excess credit? We have a latest amendment, that is as per Rule 88A. As per Rule 88A, the excess credit can be used, excess credit of IGST can be used for payment of CGST and SGST liability in any manner, in any proportion. So 98,000 I have. Out of that 98,000, 36,000 I am using for payment of IGST. So 98,000, 36,000 I use. Still how much balance I have? 62,000. That 62,000 I can use for CGST and SGST. So multiple answers will come. Multiple answers will come. There is no standard answer for this. Multiple answer will come. Out of this 62,000, what I will do? I have some SGST credit also. So therefore, I will use 50-50. I will use 50-50. That is 31,000 I will use for payment of CGST and 31,000 I will use for payment of SGST. Then I will use 14,000 and 14,000 for payment of CGST, SGST. Before utilizing IGST credit, CGST and SGST credit should not be exhausted. So first we need to exhaust IGST credit, then only CGST credit, SGST credit we should use. So please see the presentation. So first IGST credit for IGST liability. Then IGST credit between CGST, SGST. What I did equally, but what they did 11 and 51. But any answer is correct answer. So if you see the note, so they are telling IGST credit after being set off against IGST liability can be utilized for CGST and SGST in any order, in any proportion. Thus, there cannot be one answer. There cannot be one answer. There are multiple answers for this. So, any way you present, the answer will be same. So, from here, any way you can do presentation, the answer will be same. But ensure that you are not carry forwarding any credit and fully you are utilizing. Suppose if you use this credit fully for CGST, then the CGST credit remains that cannot be used for payment of SGST. So there you should be careful. But otherwise, this is the way in which you need to present. So anyway, you can divide equally. That is best answer. So divide the IGST credit, excess credit equally between CGST, SGST. Then use CGST credit, SGST credit. Balance will be net GST payable. So if at all this question is asked, this question will be asked for minimum 8 marks. That is the weightage of this question. So this question covers multiple points into this. Then next, question number 14. Question number 14. It's a little easy question only. Multi-Services Private Limited, registered in Punjab, is engaged in supply of variety of services. Its turnover was 35 lakhs in the preceding financial year. So services 35 lakhs. Actually services, what is the threshold limit? 20 lakhs. But they are making supply of 35 lakhs. It has provided the following information for the month of April. Fee for coaching provided to students for competitive exams. See, education services provided to students, faculty and staff is exempted. But this is a coaching center. Coaching center is not exempted. Coaching center will be taxable. Only schools up to 12th standard exempted. Education for obtaining a qualification recognized by law in India, that is exempted. Approved vocational education is exempted, but coaching centers, tutorials, etc. are not exempted. That will be taxable. Receipts from services provided in relation to conduct of examination of Purity University. So listen carefully. Any services by way of conduct of examination, any services by way of conduct of examination of an educational institution, let it be category 1, category 2, category 3. What is this 3 categories, sir? So I'll just explain this because, just like that, I don't want to explain. I want to give the information properly, okay? So please listen. Otherwise, I cannot sleep happily. Say this. Services provided by educational institution. Services provided by educational institution. To whom? To students, faculty and staff is exempted. To whom? Students, to faculty and to staff is exempted. Services provided by educational institution to students, faculty and staff is exempted. Now that educational institution is divided into 3. Category 1, category 2, category 3. Category 1 educational institution, that is up to 12th standard or equivalent, because not in all states 12th standard will come and 12th standard is there. So in some states 11th and 12th is part of a separate board. So in Karnataka it is called as PUC, in Andhra Pradesh it is called as Board of Intermediate Education, in Maharashtra it will be called as junior college, like that. So you need to remember up to 12th standard or equivalent. That is category 1. Then category 2, education for obtaining a qualification recognized by law. Education as a part of curriculum, for obtaining a qualification, recognized by law. That is category 2. Example of that is all colleges, even ICI, ICSI, ICMA, everything will come into that category 2. Then category 3, approved vocational education. Approved vocational education. So there is some approved vocational education courses. That approved vocational education courses will come under category 3. So these are exempted. Services provided by educational institution. Now we are discussing services provided to educational institution. services provided to educational institution. Concentrate. What are they? Services provided to educational institution. There is a matrix. There is a matrix of exemption. We need to understand. A, transportation. There is one person who is providing transportation services, to category 1 educational institution, category 2 and category 3. So providing transportation services to category 1 educational institution is exempted, but providing services to transportation services to category 2 and category 3 educational institution is taxable. Then next, B, that is catering services. Same, category 1 educational institution it is exempted, and category 2 it will be taxable, and category 3 it will be taxable. Then C, security and housekeeping. So category same, category 1 exempted, category 2 taxable, category 3 taxable. So these 3 cases it is taxable. Then D, that is conduct of examination. So any service in relation to conduct of examination. So all 3 category education institution it is exempted. All 3 it is exempted. Then online periodicals and journals. Online periodicals and journals. With respect to online periodicals and journals, with respect to category 1 it will be taxable, category 2 exempted, again category 3 it will be taxable. This is the matrix of exemptions. Now first, services provided by them as a coaching center, taxable. Second, services provided by way of conduct of examination for category 2 institution, so exempted. Then amount received for transportation of students to category 1. Please see, Lotus Public School, category 1, so exempted. Amount received for providing the security and housekeeping service to Dani Public School, again security and housekeeping to category 1 is exempted. So you have to write this. So if you know this table, if you know this chart, you can complete writing that answer. Okay. So that is that here. Then last question, with that it is over. Concentrate. The due date of payment of tax for a person paying tax under section 10. Section 10 is composition scheme, is aligned with due date of return filed by the said person. Discuss the correctness or otherwise of this statement. No, because a composition scheme dealer is required to file a statement and a return. They need to file a statement, they need to file a return. Statement is filed in CMP 08. So they need to file a statement and a return. So statement is to be filed in form GST CMP 08, whereas return is to be filed in GSTR 4. Frequency, this is quarterly, but GSTR 4 is annual. And when quarterly, 18th of following quarter, 18th of following quarter. And when they need to file GSTR 4, 30th April of next financial year. Now, even though they are filing return annually, but they need to pay GST quarterly. Pay GST quarterly along with statement. By when? By 18th of following quarter. By 18th of following quarter. Understood? So therefore, this is what you need to write as answer for that. So now is the statement true? No. So they will file annual return, but they will not pay tax annually. They will pay tax quarterly. So this information if you write, that is the answer for that. Now, Sir, how to do the presentation? See, for case study based questions, you follow this. For practical questions, ensure that for practical questions, there is a checklist that you need to follow. First, give heading here. What is that you are doing? Computation. Then second, all workings you show. All workings should be shown. All workings should be shown. So don't miss any working. So computation you are doing, that you show. Then next, number 3, important notes. You have to write the notes. So whatever is the provision that is running in your mind, for that answer, you need to write the notes. Notes are crucial. So you cannot escape from that. Notes explaining provisions. So these are the 3 key points for presenting the practical questions. Now, so I completed on time, 7:30, not on time, actually half an hour late. And with this, we completed the today's session that is related to RTP November 2020 discussion. Okay. Sorry for taking little more time and kindly forgive me, and hope this information is of much useful to you, and whatever is the handwritten notes, etc., I will be giving in the description of the video. It will be available. So therefore, have a superb preparation. All the very best for your exam. So just remember what are the points which I have discussed while solving, and this will give you enough of confidence for tackling the exam. Okay. Thank you.
Thank you so much, Tharun Raj sir, for a wonderful session. And in fact, it was a very in detail presentation of and explanation of RTPs. And you did your part. And all the best, students. And thank you so much for your time, sir. And it was a really wonderful session, sir. And now I will call upon few students volunteers to give feedback. So Chaitanya, so can you just please give your feedback?
Yes, sir. It was always very happy to hear your session, sir. It's very vast coverage with more clarifications. And thank you very much, sir, for sparing your time and making this session successful. Thank you, sir.
Yeah. And Patel? Patel, you should unmute yourself.
Hello. Sir, good evening, sir.
Yeah.
Sir, thank you, Golden. Thank you so much for golden opportunity, sir. And then special thanks to Tharun Raj, sir, for giving an in detail explanation on RTP, on indirect taxes. And thank you so much, sir, for making fantastic day. And then this particular moment will not forget for after examination, sir. Every point is it is maybe remember we can able to recollect all those things within the 2.5 hours, sir. You had taken 30 minutes extra, no problem, sir. One of my friends told you can, sir, you can take up to 9:30, no problem for us. And now, sir, thank you so much, sir. Thank you so much for being with us, sir.
Thank you, Tarun Raj sir, for once again on behalf of CASA Bangalore and Bangalore branch. And it was really apt recap. So you had covered everything, all the aspects in RTP, and then it was like sitting literally in classroom, and then everyone enjoyed it, sir. Thank you so much.
Thank you.